All right, let's take a few minutes to walk through some example problems related to the concepts in Chapter 19. This first problem is giving us a list of costs and expenses that were incurred by a manufacturing company. They manufacture furniture. We are going to be classifying these expenses into whether it is a direct material cost, a direct labor cost, or a manufacturing overhead cost. These costs all are the cost incurred as they are making their product. So we know that if these are costs of making the product or a cost related to the factory, they will be a product cost. And there are three types of costs incurred when making a product. There are direct material costs, there are direct labor costs, and there are overhead costs. Overhead costs are going to be any cost incurred while manufacturing a product that are not materials that are direct, or material costs that can be directly traced to each inventory item, or direct labor costs, or labor costs that can be directly traced to each inventory item. Taking a look at the first one, salaries for assembly line inspectors. These are the inspectors that are really on the assembly line inspecting the product. We can trace the costs that they incur for their salaries directly to each inventory item. This would be considered a direct cost, and it is a direct labor cost. The next one, insurance on factory machines. This is the cost incurred because they have machines used in their manufacturing process. This is not a direct material cost. It's not a material cost going directly into the inventory. It is not a direct labor cost. It has nothing to do with labor. So it must be an indirect cost of making the inventory. The insurance is on the factory, and the factory is where the inventory is made. So it is a cost of making the inventory. It is a product cost, but it is not direct, so it is classified as a manufacturing overhead cost. Property taxes on the factory building. Again, this is a cost of making the product because it's associated with the factory where the product is made. It is not a direct material. It is not a direct labor. Thus, it is an indirect cost of making the inventory. Thus, it is also classified as a manufacturing overhead cost. Factory repairs. Again, it is not a direct material cost. It is not a direct labor cost, but it is an indirect cost of manufacturing the product. It has to do with the factory. Thus, it is a manufacturing overhead or an indirect cost. Upholstery used in manufacturing furniture. This is the material that is going directly into each inventory item. We can directly trace our upholstery costs to each inventory item. Thus, it is a direct material. Wages paid to assembly line workers. These are the wages that are paid to the workers standing on the assembly line, working and making the product. Thus, it is a labor cost, and it is a direct labor. We can directly trace the costs of the workers putting together the inventory directly to the inventory item. Factory machinery depreciation. Again, this is a product cost. However, it is not a direct material. It is not a direct labor. It will be classified as a manufacturing overhead or an indirect cost of producing the product. Glue, nails, paint, and other small parts used in production. These are materials that are needed to make the inventory. However, they are not a direct cost of making the inventory. They are an indirect cost because these are not going directly into the inventory items. They are used in the overall production process. Thus, they are classified as an indirect cost or a manufacturing overhead. Factory supervisors' salaries. These are a product cost. However, they are not a direct material. They are not a direct labor. The factory supervisors are not directly working on the inventory. Their costs cannot be traced directly to each inventory item. Rather, they are an indirect cost of making the product. So their labor costs, their salary and wages, would be classified as a manufacturing overhead cost. Finally, wood used in manufacturing of furniture. This is the wood that is actually making, it's part of the furniture. It is going directly into the furniture. We can directly trace the cost of the wood to each inventory item. Thus, it is a direct material cost. Okay. Hopefully that helps you break out the types of product costs into whether it is a direct material, a direct labor, or an overhead cost. All right, the next problem we're going to work on is going to have us looking at a list of costs and expenses incurred by the Caroline Company for the month of May. And from this information, we are first going to identify what the total amount of manufacturing overhead is. And then we are going to identify total product costs and total period costs. So we are first going to start by identifying out of all of these costs which are indirect costs. Remember, manufacturing overhead are all the indirect costs of making a product. So we want to look for product costs that are not direct. They are indirect. Looking at the first cost, factory utilities of $11,500. Utilities are an indirect cost of making the inventory. It has to do with the factory. It will be a product cost, and it is a, let's see if I can get this all into one screen. There we go, this is better. So the factory utilities are an overhead cost. Depreciation on factory equipment. It is an indirect cost of making the product. Thus, it is also a manufacturing overhead cost. Depreciation on delivery trucks. While this is a cost, it is not a cost of making the product. This is a selling cost. So it is not a product cost, it would be a period cost. So it's not going to be included in our overhead if it is not a product cost. Because remember, product costs are one of three types: direct materials, direct labor, or overhead. If it is not a product cost, it doesn't fall into one of those categories. It would be a period cost. Indirect factory labor. It has to do with the factory. It has to do with making the inventory. So we know it's a product cost. It is not a direct material. It is not a direct labor because it is indirect. It will be included with our overhead costs. Indirect materials. It is a product cost because it has to do with the materials making the product, but they are indirect. They are not direct materials. So they are also an indirect cost of making the product. Direct materials used. These are a product cost because they are materials used to make the inventory. However, they are not they are direct, so these would not be included in the overhead cost. They are a direct material. Factory manager's salary. This is a cost of making the product. It has to do with the factory where the product is made. It is not a direct material. It is not a direct labor. It is an indirect cost of making the inventory. It will be included with our overhead cost. Direct labor. This is a cost of making the product. These are the labor costs of the employees working on the assembly line, putting together the product. But it is a direct cost, not an indirect cost. So it is not included in our overhead cost. Sales salaries. This is not even a product cost. This has to do with the selling of the inventory, not the producing of the inventory. Thus, that will be a period cost, not a product cost. Property taxes on the factory building. This is also a cost of making the product because it has to do with the factory. It is not a direct cost. It is an indirect cost. It will be included in our overhead cost. I've missed one, repairs to office equipment. This has nothing to do with the factory, nothing to do with making the product, so this cost would be a period cost. factory repairs. These are repair costs in the factory. It is not a direct material. It is not a direct labor. It would be an indirect cost of making the inventory, an overhead cost. Advertising and office supplies used. These are both costs incurred by the company, but they are not incurred in the factory, or they don't have anything to do with making the product. Thus, they are a period cost. We have now added up our total overhead costs. Of all of those costs, $166,350 are indirect costs of producing the product, indirect manufacturing costs. Now, out of all these costs, let's add up the total product cost. Remember, product costs are three types: direct materials, direct labor, and manufacturing overhead. We went through here and identified all of the manufacturing overhead already, and we added all of those up. Total manufacturing overhead, $166,350. The other two costs we need to identify are the direct materials and the direct labor. Looks like we have our direct materials used of $137,600 and our direct labor of $69,100. Thus, our total product costs for the period were the materials direct, labor direct, and indirect costs, the overhead, totaling $373,50. The last item they want us to come up with are the period costs. Remember, all of these costs are classified either as product or period, and then the product costs were further classified as materials, labor, or overhead. In the biggest picture, product versus period. Product costs are going to be anything having to do with the factory or anything to do with making the product. The costs that have nothing to do with making the product, which would be depreciation on delivery trucks, and looking down here, sales salaries, and repairs to office equipment, and advertising and office supplies used. The total period costs are $72,140. Hopefully that makes sense. Let's move on to the next problem. All right, the last problem we're going to work, actually the second to last problem, is working with Aikman Corporation. They gave us the following costs for the month of June 2010. First, we're going to prepare a cost of goods manufacturing schedule for June, and then we're going to prepare an income statement just through the gross profit for the month of June, assuming sales are $87,100. The cost of goods manufactured schedule is going to be reporting ultimately the total cost of goods manufactured. This schedule follows the flow of cost through the three inventory accounts. Remember, the three inventory accounts used by a manufacturer are raw materials, work in process, and finished goods. Cost of goods manufactured reflects the cost of the goods that were completed and the cost transferred out to finished goods. Thus, we are going to show the flow of cost through the work in process account. Ultimately, what we'll end up doing is reporting the beginning work in process balance, the costs added to work in process during the period, to get the total manufacturing costs that were added to the work in process beginning balance. That gives us the total cost of work that was in process throughout the month of June. If we know the total amount in the work in process account during the month, we can subtract out the balance at the end of June in the work in process account. Total cost recorded in the account, less what was remaining in there at the end of the period. The difference is going to be the costs that were transferred out of the work in process account, reflecting the cost of goods manufactured. Understanding the format is the most difficult part. Here we have all the information presented to us. Here is our beginning work in process account at the beginning of June. Beginning work in process of $3,000. The three costs we added to it or recorded into that account as we were manufacturing the inventory were the amount of direct materials used, $20,000. We added to it the direct labor cost, total cost of labor incurred as we were manufacturing the inventory during the period, and then all of our indirect costs, our overhead. Here is an indirect cost, indirect factory labor, factory utilities, depreciation on the factory equipment, maintenance on the factory equipment, indirect materials, and the factory manager's salary. Total manufacturing overhead of $13,300. Thus, we had $3,000 of cost in beginning work in process inventory. We added another $60,300 in additional manufacturing costs during the period, bringing the total cost of manufacturing for work in process of $66,300. We subtract out the ending balance in work in process, reflecting cost of inventory still being worked on. Total cost recorded in the account, less what's remaining. The difference between the two is going to reflect the total cost of goods manufactured, completed, and transferred out, $62,500. Now to prepare an income statement for the month of June. Remember, income statements are reporting the sales minus the cost of goods sold. Net sales, the difference between gross revenues and any discounts, returns, and allowances. Cost of goods sold. In a manufacturing environment, cost of goods sold is the amount that was transferred out of the finished goods inventory, or the cost recorded as cost of goods sold for the finished good inventory that had been sold and taken out of the finished goods inventory account. So to calculate cost of goods sold in a manufacturing environment, we show the flow of costs through the finished goods inventory account. The beginning inventory balance plus the cost of goods manufactured, or the cost associated with completed inventory transferred over from work in process to get the total cost of goods available for sale, less the amount of finished good cost remaining. The difference between total cost of inventory ready to sell and the cost of the inventory not yet sold is going to be the cost of the inventory sold, or the cost of goods sold. Dropping in our numbers now, here is net sales, $87,100. Beginning finished goods inventory of $5,000. Add in the cost of goods manufactured, which we just calculated on our cost of goods manufactured schedule. Beginning finished goods inventory plus the cost of goods manufactured, or the total cost added to finished goods, gives us total cost of goods available for sale, less the balance remaining in finished goods inventory at the end of the month. Difference between total cost of goods available to be sold less the cost of goods not yet sold is going to be cost of goods sold, or the amount that had been sold and transferred out of finished goods. Net sales minus cost of goods sold calculates gross profit. Now the income statement would continue on normally to report all of these selling, general, and administrative expenses, but the problem didn't ask us to go beyond gross profit. Okay, our final problem here is going to have us prepare the cost of goods manufactured schedule, just like we did in the prior problem, along with another income statement through gross profit, and finally the current asset section of the balance sheet on December 31st. Here we have, let me make this a little bigger, the information that was taken from this manufacturing company as of December 31st of 2010. We are given beginning balances in their raw materials, ending balance in raw materials, beginning and ending balance in finished goods, beginning and ending balance in work in process, along with a bunch of information about cost, revenues, contra revenue account, and amount of raw material purchases. Okay. So what we're going to do now is try to get this all on one page to make it easier. All right. Let me see if I can insert a page break. Bear with me. Here we go. Okay. Cost of goods manufactured schedule. First things first, we need the beginning balance in the work in process inventory account. Looking over here, here is our beginning balance in work in process, $9,500. Now we need to add the amount of direct materials used and added to work in process during the year. To do that, we are going to show the flow of costs through the direct materials account. Now this is a little bit different than what we did in the previous problem. In the previous problem, they just told us the amount of direct materials used. But in reality, what we're going to do, and what we're going to do here, is show where that direct materials used amount comes from. And the amount of materials used is the amount that comes out of the raw materials account. So we're going to show the flow of costs through raw materials. The beginning raw materials balance of $47,000. The amount added to our raw materials during the period is the amount of raw materials purchased. Total raw materials purchased during the period were $62,500. If I add the amount of purchases to the beginning balance of raw materials, that tells me the total amount of raw materials that were available for use in production. If I had total materials available for use of $109,500, and I subtract out the amount of material costs still remaining in raw materials at the end of the period, which was $44,200, the difference between total material cost available less what still remains in raw materials has to be the amount that was transferred out and the amount of materials used and recorded in work in process. So we now have our direct materials used, which is what we had done previously here. Only difference is last problem we were just given that amount. In this problem we had to show the flow of costs through the direct materials account. The next item we are going to add to work in process beginning balance after materials used is going to be the amount of direct labor. Here are our direct labor costs, $145,100. In the next chapter, in chapter 20, I will show you where that number comes from. Right now we're just given. And the last cost added to the beginning balance and work in process during 2010 are all the overhead costs. Looking here at all of these costs that were reported, looks like we have direct labor, indirect labor, factory insurance, factory machinery depreciation, factory utilities. Office supplies is not a product cost, that's a period cost, so it's not an overhead cost. Plant manager's salary is factory property taxes, factory repairs. Those are all indirect costs of producing the inventory. Total overhead of $93,000. The 3 manufacturing costs added to the beginning balance and work in process. These totaled $303,400. Beginning work in process plus the cost added to it gives me the total cost of work in process. If I subtract out the ending balance in the work in process inventory account, it will leave me with the amount transferred out of that account, or $3,049. Thus, total cost of goods manufactured for the year ended December 31st of 2010 is $3,049. Okay. Now, continuing on and preparing our partial income statement, we need to get net sales first, which is our sales minus our, sales minus our contra revenue accounts, discounts, returns, and allowances, gives me net sales. Then I subtract out cost of goods sold. I come up with cost of goods sold by showing the flow of costs through the finished goods inventory. Beginning finished goods inventory of $85,000 plus the cost of goods manufactured that I just calculated in my cost of goods manufactured schedule. Gives me total cost of goods available for sale. Subtract out my ending finished goods inventory balance. Leaves me with total cost of goods sold. Sales minus cost of goods sold gives me gross profit. Again, to calculate net income, I would end up subtracting all of the operating, selling, and general administrative expenses. But again, this problem, similar to the previous one, just had to stop at the first partial portion of the income statement. The very last thing that this problem wanted us to do is to prepare the current assets section of the balance sheet. In addition to the inventory accounts, the other current assets are accounts receivable and cash. Really what this problem is trying to show you is that, just like in your prior financial accounting course, cash and accounts receivable are current assets, or in other words, assets that will be used up within the next year. And inventories are also considered current. In 211, in a retailer or a wholesaler, we have one inventory account for merchandise inventory, but a manufacturer has 3 inventory accounts. So these are reporting the ending balances in our 3 inventory accounts. Finished goods, raw materials, and work in process. This company's total current assets are $175. Again, just a small part of the balance sheet, but getting you to see that those 3 inventory accounts are just very similar to any other inventory account you had worked with in the past. All right, I hope this helps. Reach out if you have any questions.